want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich trading. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. How do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you are committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. Holding Bitcoin, what do you think you could do? What do you think you could achieve yearly? What happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000, and growing your account to $46,000. That's only over a 5-year period, but it's also with a 30% return. I think that I personally expect to achieve over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. Now, $2 million is comfortable. You could basically buy whatever you want whenever you need it. Really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, it's every 210,000 blocks. Next one, estimate 20,024, 20,028, 20,032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. And now you're looking, total deposits over those 12 years, $39,000, $3,000 a year. You're committing to this plan, to your investment plan. And then you're looking at, $5 million if we hit our expected 70%. Anything could happen. Understand your risk and what your risk is before you make any investment, and do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if there was just an 85% annual return in Bitcoin over the next 12 years, you'd be looking at something, $15 million. That's from here on up. You go on borderline ridiculous for a 12-year plan. But 70%, 12 years, next 3 halvings. You're starting today. $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments. All right, CTM. Happy Thursday, everyone. You know what, G Black? At the time that was put together, I thought it was probable, and I still do, regarding dollar cost averaging in the Bitcoin, and then hoping is the word of emphasis here, put it in bold, italicize, because you're hoping over the next 11 years that there's a 70% annual compounded growth return, and that's largely unknown. It could happen and it could not. CTM 2.0, it puts us in a position to take that probability and increase it drastically, and it is absolutely ridiculous. All right, CTM, we got to get into it. Thanks everyone so much for the good thoughts, for the prayers. Feeling much better here today. I really appreciate that kindness, and ready to continue doing what we do, right? So much more calculated. I feel good. I feel good about where we are. You know, that's why we're talking about then, or I like to talk about the goal. My goal is after taxes hitting that. And it was brought up earlier on the Twitter regarding, Jordan, what are you talking about, stacking stats and self-custody, and then you're taking profits here, and people underestimate the planning it takes place to deploy a strategy into the markets. We have three main strategies. There's the cold storage stash, what I like to refer to as CTM 2.0. You're looking right here on the 8-hour. Some people might be doing this on the daily time frame. And then there's the beginning of this video we just saw, and that is the long-term fiat strategy. I like to refer to it as, because we have the cold storage stash number one. This one's a fiat strategy. You're using crypto. I like to do it on the daily time frame in order to go ahead and have this diversified potential nest egg. And together, it's really, really strong. Yeah, I have that for the end. I'm itching to take a look at what's happening across the markets, but we'll look at that in just a moment. And I just wanted to start off here as we get into CTM 2.0 positioning here. Just a reminder, right? For those that are old and new, just a reminder, right? Upon taking profits, wait for your next trigger to enter. Continue to manage any other open positions. Trade only according to your rules, or you will get wrecked. It takes self-control and mastery. And that's true enough over here on Bitcoin 8-hour time frame. Taking profits. If you don't have this template over here, you could go into Conquering the Markets. You go into CTM, Getting Started CTM, and you could find these chart templates. Just click on it and save it as your own. Same thing inside CTM Core. You could always get the latest templates at any point in time, including with notes of when they were updated. You could also always go into your strategy tester right over here and click list of trades to find out whether or not you're in any current position. Right now, Bitcoin on the sidelines. It has recently closed a long position and just hanging out waiting. And that's a great place to be, because I have to be honest, right now, it does appear that markets are losing a little bit of steam. And technically, equity markets here on the verge of going from neutral back to that bearish tint. But at the same time, no one knows what's going to happen next. And that's the best thing about what we do here, is that we don't even need to know. We like to know, but we don't need to know. And here you have Bitcoin taking nice profits and now sitting on the sidelines, waiting to see where it goes next. You have Ethereum still holding up that trade well extended into profit, and Cardano is just on the sidelines itself. Lately, I've been wanting to show you what this looks like. That's so important, right? And in ACE, we're moving largely into psychology. It's so important here as we have these foundational strategies set in place. Actually, today, as we get to talk about and finalize Cardano, we're on the crypto end, we're set, right? And that opens up new things as we're all finding out. But over here, you could see that Bitcoin, if you were to see price roll up, if you were to see price come out of now what looks like potentially, hold on, let me zoom in over here. Let me just take a look at her. Now, I was going to say that might be like finally now looking like a bull flag, because that was an upward rising channel. That wasn't a bull flag. but this looks more like a potential bear flag developing to me. Either which way, Bitcoin you could see over here could come back up and re-enter along if price were to swing that way, and quite a ways from having to enter any or wanting to enter any type of short position. Ethereum here is holding comfortably, and it should be for a little while to come. So that can mean either giving back gains. We talked about that at the top, that our expectations are always that we're going to give back profits. Now, the way that Bitcoin is situated here, look, the beautiful dance, right? Bitcoin locking in profits, Ethereum still holding. That could give back or it could extend. And you could see here Cardano, that's looking and waiting to go either which way. That would be the first one of our three to enter on the short side and attack to the short side. Again, there hasn't been a buy side trade on Cardano in over 12 months. And at the same time, it's getting closer to where it could go ahead and kick off its first buy side trade in a while. So in this uncertain time, thank you so much. What an amazing thing to share in this journey here together with you all. If at any time, I don't even know what I was gonna say. Well, let's keep moving along. I was gonna say something. I don't remember what it was. And it's beautiful to see though. You remember it was back in March. Back in March 2022, we launched CTM 2.0, and it's nice seeing here. We're not a year, but we're getting closer to a year anniversary. That will be March the 14th, and seeing all three here at new all-time account heights is a great place to be. Really liking on that, loving that. We got Bitcoin on the daily. It's still holding its open position. That open position is 10% into profit. And then we're looking at Ethereum on the daily, also holding that open position 22% into profit. And again, look, the daily time frame offers an extraordinarily advantage for those that are executing manually, in so much that it really fits ease of lifestyle. One time of day, you could have a potential new signal or entry, stop losses inputted, could happen at any point in time. It makes it very easy to trade. The returns, again, we go back to the beginning of today's session, and we looked at, setting that enormous goal. Enormous goal. This is like Renaissance technology is the best of the best. And granted, they're trading $10 billion fund, and it's harder to do things with money that size. Nevertheless, we're not trading a fund that size, but be able to compete as far as return. It's a beautiful thing that we share here together, and why the 8-hour does offer more profit potential. And there are many willing to do whatever it takes. And that includes those 3 signal periods a day. You have to figure out what is best for you in order to get you to be executing clearly and effectively. Sale Guy has pointed out, in his opinion, it's better to start off with 1 pair and make sure that you're executing well on that before then entering to 2 or 3. And then, of course, there are some within CTM that are trading a portfolio of altcoins, but I'm executing here on the majors. Cardano is something that really was looking to find the missing piece of this puzzle. And as far as the daily time frame is concerned, I lost my mouse. Hold on one second. All right, there we go, connected. And let's finish that today. Thanks, David. I'm feeling much better. I appreciate it. I'm glad that it was not as long as my wife's, less than some of the kids. My kids, CTM, kids doing much better than myself, but here we go. So, all right, let's pick this back up. We worked on this a couple of days ago. Yesterday, we worked largely on the stock market. We'll come to that in 1 second. First, I want to talk about Cardano on the daily time frame, and I just want to give you a brief little insight to why we make the decisions we make and how we make them and what we do. So, yes. G Black, as far as the fundamentals of Cardano, it's been about a month, but we like to look at the adoption and network effects across Bitcoin, Ethereum, and Cardano. Hopefully, could be something we could do tomorrow's Friday session because it's been a minute. And if we don't, so please remind me, someone, when the time's right. That would be cool to do. Someone mentioned in the Discord this week regarding Canada and a stable coin, large and Cardano. That's from afar. No one quote me on that, but you could check it out. And then, and by the way, just of note, the World Economic Forum home base, Australia, is launching a stable coin as well. All right, let's move over to the topic at hand, and that is Cardano here in the daily. One of the cool things, though, about our work here on Cardano is that it doesn't matter whether or not in the next cycle Cardano makes a new all-time high or not. As was seen in 2022 on the short side, Cardano putting up altogether for the year a little less than a 200% return, and just on the short side. And then you could see why we had this like little, I don't know if it was, well, a nice sharp up move on Bitcoin, Ethereum, Cardano here. Look at the size of that move though. That was a 42% move. And then if I go to the high, or a 50% move, and it's just showing in my humble opinion that when the market does return to any side of upside appreciation, the moves on Cardano are going to be really beautiful to trade. And again, because of CTM 2.0 not putting you in the position where I think that this is going to work out in the long time, I'm going to dollar cost average into it. And that means I hope that it makes new all-time highs. This takes that out of the equation, and it makes you just much higher probability of you achieving your goals. Now I'm going to go back, and again, this is the settings over here. This is Sale Guy's interpretation of what he believes is going to wind up being the most highly valued candidate that we're going to start putting over here on our daily perfecting the diversified portfolio, and have the beautiful dance taking place between Bitcoin, Ethereum, and Cardano. And beautiful dance because at different times they each make new all-time highs, helping diminish that drawdown and make that equity curve smoother. And I'm just going to start off here. This is looking at, you can see it at the bottom, right? I moved up the titling so that you could see now the percentage gains at the bottom. Just wanted to make sure. What, Michelle, could you elaborate on that? I'm not sure exactly what you're talking about. Please talk about time frame and pair, and then I could pick back up on that. And you're looking at this, and you know, we have 6 highly valued candidates over here. Massive work done by the Hive Mind, including Gav, Zuzu, for sure. We saw Sale Guy and Sib very active on this in Cardano. 203 you're talking about. Got it. Oh, that's interesting. And look, this is done. 203 is an outlier, and it's an outlier because this work is done purposely using no stop loss. Now, a lot of the candidate templates is what they do is they use they're formed with no stop loss, and then a safety stop loss is put in. This over here, Zuzu's rendition here, done purposely using no stop loss at all. But the 3 candidates that we're looking here as far as to fill that slot is going to be one of the bottom 3. It's 206, 204, 205. And if you could see, just coming back to 2018, there is one notable difference between these 3 because the returns are all tremendous. The drawdown over here between 204 and 205 is 30%. And then at 206, you're seeing the drawdown stand out 23%. And it happens that the overall return is greater. But at when we're talking about such intense returns, what we're more interested about is keeping that low drawdown. So off the bat, it seemed to me going back to the fullest time that 2000 and 206 was going to be the standout candidate, but it doesn't end there. So the first thing you do is you go back and you look at what happened in 2022. And I could say that, well, these were all on the short side, by the way. This had 150% gain, 23% drawdown. The gain was the same on the upside, 151%, same drawdown, and then again, the same performance across the board. Now I come back and look from 2021 to present, and I'm looking and I'm seeing, okay, 347% gain, 23% drawdown. Come to 204, wow, that's a notable difference. The drawdown is higher, but the return is almost, it's like 8x, 9x higher. That's significant, right? Come over to 205 and I say, okay, that's in between. That drawdown is very, very high, right? So now 204, 205, right? And I'm saying, okay, because that takes it out of the picture, right? I get it. There are some people that for a 697% gain might be willing for such a drawdown. We don't entertain anything like that. It's just too much, right? So 204, 206, that's a big difference. Now, here's the thing. It's true. Regency bias is a real thing. We all pay attention to what has happened in the most recent current events, and that does shape our opinions of what's going to happen going forward. Now, in the markets, generally what happens, though, is that you have periods of consolidation. In those periods of consolidation, volatility comes down, ranges come down, and people get used to that type of behavior. But consolidation, generally speaking, not generally, always leads to expansion, right? And as you know from CTM 2.0, our largest gains and moves come off of those tight ranges. So let's go back and let's look at from 2020, and you could see from 2020 to present, you're looking at, okay, now we're looking at 14,900% gain. Again, that 23% drawdown. 204, these have caught up to each other. And you can see the drawdown of 31% and to 14,000. We'll come back further to 2019, and we see almost a 30,000% return. Again, that nice drawdown. And then over here, they're on par. No, they're not. I'm sorry. We're now outperforming on 206. 204 still with that higher drawdown. And if we come all the way back to the beginning over here, this is 2018. We see that, well, this one is outperforming. But look, what's 14,000 or 18,000 between friends? But the drawdown is lower. And there's that one standout year. There's the 1 year over here. If you look at from 2021, the last 2 years, that's a notable significant difference over here. For me and myself, though, I'm more interested about consistency over time, and I'm more interested about keeping the drawdown low. That's a tough call. I could see why a lot of people might lean towards 204, especially if they're putting more of that, let's say, focus on what has happened recently. I myself, though, I am much more interested in Z-Black. I'm sorry, that is just CTM core stuff, and I look forward to the day that you're there. I truly believe that is going to happen, but because those are all very interesting to know and see and learn about. But I know that there's gonna the amount of interest that you show, the amount of value that you continue to add, the way you interact with the community. That's what we're looking for. 206 over here. That's what I am choosing over here. It happens to be also what Sale Guy has affirmed. And for me, it's mostly about the drawdown, keeping that drawdown low. Our gains are tremendous. I'm more interested in doing what I can do to protect downside risk. That's what I'm going to go with. CTM Core. All of these are available to you. You could choose as you wish. And that's Cardano. That's coming since the first session, January 4th of 2023, where the whole idea was proposed about getting Cardano into the daily time frame after the introduction, big hat tip sale guy of Ethereum over the Christmas holiday. So that, by the way, also at the same time really solidifies and ties up crypto. Our foundational strategies now have a neatly tied bow tie. And then we get to focus a lot on developing that market psychology, that mental edge, making sure that everyone is working on discipline, execution, and fine tuning, and then managing your risk. Also not has to do with the system you're trading, the strategy you're trading, but obviously, as everyone now understands, what exchange you're using and what type of risk you're putting out there in that way. And I think that we're looking at a period where we've seen that historic volatility really hit all-time lows. And we see Bitcoin now perking up a little bit. And I think that we're getting ready. And now that volatility doesn't mean it's going to be on the upside. It could also be on the downside. And, you know, if you're trading the buy side only, and by the way, the buy side only is more than enough. And if you just took yourself a 24% gain, you're out of the market. Regardless if price moves up or down, being on the sidelines is just as valuable. Preserving that capital is just as valuable, even if it was for the rest of 2023, there was not a single buy entry on Bitcoin. Rather than going ahead and if price comes off another 50%, that takes 100% gain to come back from. If price came off 75%, that's another 300% gain it would take to recover. You got to be smart. There's no question about that. All right, let's move over from Cardano. Let me briefly discuss now. By the way, massive effort done over here. Really appreciate all the work done on the spreadsheets across the board, helping us make these important decisions. We talked about yesterday in yesterday's session, and one of the beautiful things about now having the crypto end highly polished is that it opens up long-term goals of CTM. And one of those long-term goals has always been, the stock market. And finding solutions now, all of the energy or the majority of the energy of the hive mind has gone towards the crypto because of generally the sector itself, because of the potential growth ahead, because of the volatility, because of the returns. As you saw yesterday, what we were able to do on the triple Q, TQQQ and SQQQ, leveraged ETFs for the QQQ, tremendous returns. And that is something that really exceeds my expectations from afar of what we were going to do in the stock market. It's not even going to stop here. We're just getting started. I imagine throughout 2023, this year ahead, now that we get to spend more energy and focus elsewhere. Now that's not going to stop on the stock market. That also will be in the foreign exchange. That also will be across commodities, probably commodities before foreign exchange. Foreign exchange requires a whole different type of mentality. Now it can be done through simple support and resistance, but we like to trade mechanical. It offers an enormous edge, taking much more of the emotions out of the equation. Forex is going to require some type of mean reversion strategy rather than a momentum-based strategy. Stocks, however, are different, right? And just the thing I wanted to end off on stocks, by the way, it takes a little time. To get those invite-only scripts out, there's a lot of code that needs to be reviewed, looked at. It's probably be by Monday that I have the work that we did yesterday or looked at yesterday on the stock market released as invite-only scripts. And then for CTM Core, I'm hoping by the end of the day to get those out there as well online. This comment over here, though, right, Al Mike, honestly, after watching today's video about ETFs, I was going to use the buy signals off of the ETF on different time frames and compare the option prices of the underlying ETF to leverage even more, but with fixed risk. Option prices, the underlying ETF to leverage even more with a fixed rate. I was just curious to see what it looked like. I'll just hold off to there's the moat for the pro share. I'm assuming they will be. Thanks again. Look, that's awesome. I have always wondered about CTM in conjunction with options. I think it, look, you know me, I kind of like put something out there, I let it sit, it's like, and then like in its own time, it's dived into that, and it's now coming up. But stock market and then CTM with options is something I'm very interested. I'm sure there's a portion of the hive mind as well. I'm looking forward to opening up that work here in 2023. The almanac. The almanac is now, by the way, all of it is included on CTM core modules. Almanac is going to be discontinued. It's on the list of things to do right now this week. Obviously, stocks, Cardano have taken most of the attention. It's not really that important, but it is on the list of do. And then the dev team wants to pick that up and be able to use that as a format where they could work on that. So that's what we're going to do. All of that, though, is listed. I think this is CTM core. Yeah. You can see if you go down over here and you go to, right, whether you go to set up charts for automation, rules for trading, you'll find everything on the Almanac inside those modules right now. What do I mean by CTM core modules? Rika, we have like the group is broken up right now into two areas. Those two areas, I'm trying to find a good little schematic here to share with you. All right, is this it? This is it right over here. We have CTM core. We have CTM, right? Daily presentations for both. We have the summit team, right? With advanced design, bringing those advanced designs back to the core. Those are shared with CTM, the coding team. This stuff here, I mean, CTM core is highly advanced, right? And the thing is that CTM summit is even more so. And rather than, because it does confuse people, it was necessary to break off the summit team. And then the summit team, whatever, like, then they bring it back to core. Again, that's shared with CTM. And we look forward to bringing CTM talent into CTM core in the future. CTM dev team, coding team, you know, we meet every Wednesday. We did not meet this week. And that, again, is where the moat comes from. That is then giving the summit team the tools they need to go ahead and do this advanced design. And that also gives the core team everything they need to do. The CTM core models is inside the Rika, inside CTM course content. Inside CTM course content, you have over here, right? In the description below, Rika, of this video, you find both the essentials, the dashboard here for CTM core, and then you also find Getting Started CTM, which has all the other templates you need. Some people, and a lot of people inside CTM core, also use the invite-only scripts because it's easier. I don't know where we're going over here. Because it's easier for a lot of people just to use the scripts. So, you know, that might be what you want to do. Just go into the link below, go to Conquering the Markets, and click on Getting Started CTM, and then you have these available templates. Email me your trading view. Gio, you got it. Just PM me or email me, or, you know, and I'll help you out easily. But just go ahead and either send me an email through the website, send me a PM on Discord to figure out any type of admin stuff, and I'll take care of it right away. And that brings us to market review. Let's take a look at what's going on over here, because equity markets are a little bit exciting in so much we're looking at the S&P 500, and S&P 500, having been rejected once again very clearly, is now coming into that line of support. Below this line of support, I would say that structurally here, we're neutral up here. We talked about being neutral once we regained the support over here. We went bearish on the breakdown. We should have went bearish on the breakdown over here, right? But we've said that, all right, back here is neutral, and this whole area was neutral, waiting for either a confirmed breakout, really big breakout above the one touch line, or we're watching for a line over here that sends us back, confirmed, very largely sell pressure. Even though structurally below this line of support, I would say that we're weak. I am waiting for a break of this trend line over here in order to say, all right, we have another potential resumption and even back towards yearly lows or making new yearly lows, right? Market review. I think okay. My keyboard was a little, I need to recharge these things a little bit. So look, this is a save by a hair if price closes above this line, but don't forget we're neutral. I would say that overall, all this is really neutral because you need a close below or a close below above to give the next potential trigger point for any type of edge as far as being able to manage risk. And whether that comes from above or below, also what's great is being ready for a fakie, right? Because you could it doesn't mean if you get a breakout, it's going to go, or if break down, it's going to go. But often what happens when you do get a move that breaks down and then gets rejected and then breaks out, that leads to a larger move. Same thing on the upside. That could happen on the upside and come down. I remember that happening on the NASDAQ. I remember that happening up here on the NASDAQ. And we were looking at this upward sloping channel. It was like this. And then we broke out above here. And then since then, that took us down and down hard. NASDAQ, very much the same thing in what's happening on the S&P 500 right now. And that is that this was also rejected over here. Again, this was rejected and then we are now trading below. And it looks like potentially closing below the line over here. Instead of on the S&P 500 where I am using this upward sloping trend line, NASDAQ has this line to confirm any type of downside potential. I would, it's weak closing down over here. I would stay out of it though, personally, and just let this, we're getting close to some type of resolution. It really does appear that way. Oil is very interesting today, right? We looked at the second attempt, first attempt occurring somewhere around the end of December, and then on January the 4th, stopping out. Entry was at 77 and then stop out at 76. We now have another potential breakout over here. We've had now a retest once and twice of that broken trend line. It continues to hold over here. Stop loss, I think, is below this trend line over here. I think that could be tightened up a little bit. Let me just go ahead and do that. Let's get accurate, right? And a close below that line, that would be the stop loss I use on this particular entry over here right now. And it's a great, again, this could be a fake out too. If you catch up over here on the breakout and then break down over here, we could be looking for a big move low. But right now, this is a buy impulse. This is a bullish event taking place and could be targeting in this area over here, break above here, and then oil would be in a bull once again. So that's oil, and oil is a little interesting today as you're seeing risk obviously being hurt. The dollar is now off. The dollar was about an hour ago unchanged, and why the dollar was unchanged, you were seeing oil up. I don't know how much of an effect the dollar is having on oil in this particular moment. And we did see, as far as supply side demand dynamics, we did see an unexpected buildup of supply. Yet here we have oil rising. It does seem that the opening up of China, which includes flights, right? So now you like flights, airplanes, they use a lot of obviously of jet fuel. And we are seeing here regardless of what you think the fundamentals are, we're seeing a technical breakout occur. Obviously very uncertain, especially after the last attempt and then breakdown. Nevertheless, you got to stay with it and stick with it. Oil's very important for us because what happens with oil is either going to take pressure off of inflation or put pressure onto inflation. Crypto is a standout today, holding up in light of the red bath we're seeing on equity markets. And dollar over here is a tough one, right? So you could say, and I could clone this and move this up a little bit, and I could say coming off of where we found that bit of support that we're in that area. And I think that's a good look. And as I say often, these lines could be really just used throughout. They get very confusing, which is why I really focus in on. Yeah, I think it's more down over here off the resistance, and then the support over here. And I think this is bigger support in this area over here. We haven't touched down to it yet. Nevertheless, price does appear to be looking to trying to consolidate above that last broken support, which is resistance right now. Until we break above this trend line over here, pressure, downside, sell side pressure continues to be hot, but it looks like, and Fire's noticed, it looks like it is trying to stabilize. We'll leave it at that. Yep. That, Chio, absolutely. And it's funny you mentioned that only because of the timing. And I was looking at like just a tweet. It's like a tweet I have over here. Let me find it. I was looking at this morning, right? And I probably do like a video on YouTube for that because like people are attracted to that, right? Now here, myself and with all of you, that's become like chocolate to us in so much as that like it really doesn't matter. First of all, like to predict price, I personally think that right now we are in truly unprecedented times. When I say unprecedented times, it's because we are seeing monetary reset underway. This next decade now, whether it goes sideways, whether I don't think it goes sideways, maybe in a range. I think it has violent moves to the upside and downside in quicker cycles. I do not have the same confidence I had throughout the last 4-year cycle. Having to let go of that and then move towards what we have now is a tremendously stronger edge. There's not even comparing the two. It is interesting seeing a lot of people, those that were interested in things like lengthening cycles, now really embracing the 4-year cycle. It's hard to argue with the timing of the top. Now, not as far as what we thought the price would be. There were many factors, including people and exchanges like FTX selling naked Bitcoin that potentially suppressed the price. They're not alone. There were probably a lot of others. But, it was the Fed who came in and changed their monetary policy at the top. And it did coincide with that timing of the 4-year cycle. And, the way the macro setting up, are we going to be there right over here, roughly 14 months from now? I don't know. It doesn't really matter for us though, Chio. And that's the truth. And it's a stronger place to be. It puts us in a position of strength. And 4-year cycle theory provided an absolute tremendous edge like no other. It was like having a cheat sheet. It could still be in play, but I think that, look, I don't know what happens from here. I don't know whether or not markets are able to put on some type of rally, whether that is a massive bear market rally, whether that is nothing more than, or even a rally to new all-time highs, maybe not Bitcoin, but equity markets, or if we are going to, as we just looked at on the S&P and NASDAQ, take out these 12-month lows and then maybe even put in some major, like, I don't know what happens next. And what happens next, that's largely what's going to be dependent on what 2023 looks like. Rico, that I like, it's funny that both of these two cycles, past cycles, 2012 halving, 2016 halving, they do converge right around that area. I don't have that price up in front of me. I think it's like 23,000, excuse me. But I will do a video for fun. And that was a reminder of it. But we don't need to do that. Dave. So, yeah, that's a good thing to talk about and to say. I almost put it into today's session. I have them up here as tabs. So as far as CME, Bitcoin, Ethereum, in my opinion, it comes down to the only way to do it is going to be if you're looking to, I'm trying to pull up a template. There we go. I think the only way that this works is, I mean, first of all, we could only go back so far, 2018 to when they were launched, or December 2017, Ethereum even less. But if you're going to do it, and if you're going to look at past performance and past data, and that includes the way that we're able to do it, at least, I'm sure it's possible, but is holding positions over weekends. And I could say, well, for the last 5 years, if you would have traded the 8-hour time frame on the CME futures, you would have had a 25% drawdown. That's including when you're holding positions through the weekends. Now, that doesn't mean that going forward, you're not going to one weekend find out that, they decided to shut off the internet, and then whenever it comes back on, that's tough going through 52 weeks a year, 52 weekends a year, having that anxiety that you're in a position that you can't exit until the market opens up. I don't know how many people would want to do that, myself included. So, but I don't think it works any other way. And I don't think that you could, for example, and it could be tested. I mean, it needs to be tested just to know. But whether or not you're going to on Friday close positions, and then how you reinitiate that position on a Monday, that all needs to be figured out. So that's left with a question mark, in my opinion, right now, David. The CME, it's like a stumbling block, right? What do we do about the having to go ahead and deal with the weekends? So at this moment in time, I am not sure. And also, safe to say that the work we introduced yesterday in the stock market, I mean, the returns are comparable. The returns are better. So offers up different options. I'm not really sure, and it's something that we have a lot of time to work out the details, because again, we have enormous foundational strategies in place. All right. And that's not going to stop us from continuing to work. That's what we do each and every day. We show up and we put the work in. Business cycle is about 4 years. Yeah. So Michelle, I feel like it's more now the not so much the business cycle as it is much the Fed and the liquidity cycle. And, we'll see. Right? We'll see. There's no question things have changed since 2008, when they first did that massive balance sheet expansion and started the quantitative easing programs. All right, CTM, that's our sesh for today. Thanks for being here. Tomorrow is Friday. Maybe tomorrow we'll look at some of the adoption. Check in. It's been about a month. Check out what's going on with network effects, Bitcoin, Ethereum, and Cardano, because it'll be a lighter session, maybe, but good week, strong week. And I look forward to, on my end, making sure now that we get the Cardano daily out, the new invite script out for the daily time frame. That will complete the trifecta. And yeah, we just keep moving forward. We're in a good pace, a good rhythm. Yes. Thank you, everyone. And that's the truth of the truth. When we see, we figured out that sweet spot, right? We know that while crypto will have bottomed likely well before, but when we start seeing total monetary supply increase, we're going to see the bull of all bulls running again. I appreciate all of you, because there's no question this is the hive mind in action. Have an incredible day, everyone. I'll see you all tomorrow. God bless you. I'll talk to you soon.
Same here, my brother.